Good to see everyone. First things first, we're going to be recording this webinar so that folks that weren't able to attend today will have access to it. Similarly, we'll be sending all of you attendees the recording so you can come back and find the answers you might have missed, as well as the slides that we're going to be sharing today will also be shared after the webinar. So feel free to take advantage of that and wait for that email to come in with more information. From a technical standpoint, if you can just keep your microphones on mute, unless you're asking a question, that'd be great. And that just reduces the background noise. I know a lot of you working from home or in kitchens or offices where there's stuff going on. So if you're asking a question, feel free to unmute. And when you're not asking questions, if you can just keep it muted, that will be very helpful. And then the way this is going to work today is I'm going to do a quick introduction. We're going to pass it on. If we can mute Gerardo. Then I'm going to pass the mic over to Chris from Veracity to chat a little bit more with you about damage to premises rented to you from the Food Liability Insurance Program group. He's going to do a quick presentation, about 20 minutes, and he's asked that you guys ask questions as we go, so you don't have to wait till the end if you are kind of like, not sure what he's talking about or want to ask a follow-on question. You can use the reactions button. There's a little hand raise. So at the bottom of your toolbar, there's a reactions selection, and then there's a raise hand. I'll do it now so you can see what it looks like. That's me raising my hand up there. And then we'll call on you. You can ask your question, and then you can lower your hand when you're done. And that's just a good way to keep people in a queue and keep things moving along without too many interruptions from the peanut gallery. And then at the end, we'll have open questions. If you had any additional questions that weren't answered during the presentation that you wanted to kind of get some clarity on, we'll do that at the end. Does that sound good, everybody? Thumbs up. Boop, boop. Yeah, awesome. Great. So my name is Ashley Colpaart. I'm the founder and CEO of the Food Corridor. I'm here with Haley, our marketing guru. We both have the flip background with the Food Corridor logo. So that's us from the Food Corridor team. I started the Food Corridor company about 8 years ago. We just had our 8th birthday, which is wild to say. And we build software for shared use kitchens. So we help shared kitchens manage their daily operations as far as their scheduling and their booking, their compliance, as well as a lot of other things. More recently, we have our onboarding flows feature that we just released that we're really excited about. So our goal is to help kitchens run their operations more efficiently so that you can service more food businesses and create more local and regionalized food systems. So really happy all of you are here. We also moderate a community, which many of you, I'm sure, are members of, which is the Network for Incubator and Commissary Kitchens. That is about 3,000 members now in a private Facebook group that we help support, answering questions for the industry. So best practices, identifying resources, problem solving, and really just creating a place where kitchen owners and operators can communicate with each other, build community, and not feel like they're so alone in this world, because managing a shared kitchen is a unique job. And it's not like you're going to go to a baseball game or a weekend event and run into other people that do that job. And so we like to create a place where those folks can join together and learn from each other and not feel so alone in the world. So we love managing that group, and hopefully it's brought a lot of value to you and the work that you do. So that's who we are. And, in mentioning compliance, obviously, because shared kitchens are so unique and there's a lot of red tape, one of the biggest issues that we come across or try to support the kitchens with is compliance. So obviously your renters need certain things to be able to legally produce in your kitchen. They need a business license oftentimes, they need food handler cards, and oftentimes they need food liability insurance. In addition to food liability insurance for your renters, your kitchen probably needs insurance for that business. And so there's layers upon layers of coverage that need to be discussed. And one of the questions that came up a couple months ago in the NIC was around this issue and where the coverage of one renter takes off and where the coverage of the kitchen correspond with that. And there was a little bit of discussion. Actually, there was a lot of discussion on this topic, and we thought it'd be really helpful to, instead of just going back and forth communicating on a Facebook comment section, is to bring the experts into the room to really clarify, so that we all have clarity and understanding what's being said. Obviously, insurance can be very jargony and sometimes confusing. So reading someone's comments and just trying to describe something can be kind of hard to wrap your head around. And so after that comment thread, I had reached out to Chris and Troy, and I gained clarity just by hearing them talk directly to me. And I was like, well, I think it's just best if people hear directly from you versus through, the game of telephone. And so the idea today is to really just gain clarity and also learn from Veracity on the resources that they have to offer. They have been partners of Food Corridor for, probably 5 years now. I think we've been partners for 5 years. They oftentimes sponsor our Food Incubation Summit. And more recently, we've partnered with them to build some new connectivity between the Food Liability Insurance Program, which is the insurance program for food businesses, into Food Corridor, so that those policies can be actually zapped over through an API from Food Liability Insurance directly into Food Corridor. And so that liability insurance, whether it's updated or not, can be updated in real time in the Food Corridor, so you know if it's expired, and your food businesses know when it's expiring and can just jump right over to Food Liability Insurance to kind of have that taken care of. So reducing risk in your kitchen, which insurance is all about, reducing risk. So look forward in a couple months to a really exciting feature coming out related to this Food Liability Insurance Program. If you are a Food Corridor client, if you're not, we'd love to demo with you. And I've talked enough. So let's jump right into our topic today. Chris, we're going to hand it over to you. Like, you've been such a great partner of our company for a really long time. And, when we chatted back, a couple months ago, I was like, we really just need to get you in the room to talk to people. So I really appreciate your time today, and excited to hear what you have to say for this community. So thanks for joining us today.
I appreciate it. I'm glad to be here. And introductions, my name is Chris Van Leuwen. I've been in the business since 1987, so a bit. My official title at Veracity is a VP of Agency Development. Just wear a lot of different hats. We develop insurance policy forms, and what Ashley talked about is all the compliance and all that kind of stuff. That's what I get involved in. So today we're going to go over a lot of different areas. I know we're going to hit on damage to rented premises. We're going to hit on insurance coverage in general. Please ask questions. I want you guys to get the most out of this. If something's not clear, please let me know. If I start talking like an auctioneer, please let me know I need to slow down, because sometimes I get into that mode. So I just want this to be an open forum. Okay, I have no agenda here. I just want to get this information disseminated so that everybody understands the risks they're taking and the risks they can pass on, and how this responds. Okay, everybody see my screen? Okay, is it up? Okay, perfect. I first want to lay a platform, some groundwork here, because in some of the comments we'd see, hey, does Flip do this? Does it do that? If it does this, I can go elsewhere. So there was a little misunderstanding of how insurance works. So I wanted to give you kind of a groundwork. There's an organization called the Insurance Service Office, or short for ISO. And what Insurance Service Office does, it's a global provider for insurance tools and analytics. ISO helps the insurance carriers understand risk so they can accurately price policies. So part of their function is statistical information, actuarial information, underwriting information, claims information, fraud identification tools, and insurance policy language. And this is what we're going to hit on: is ISO, or Insurance Service Office, standardizes insurance policies that is used by the insurance industry. I'm going to say 98% of all insurance companies adopt the insurance office policy language, or they take part of it but and intertwine it with their own policy forms. So the reason I'm saying this is anybody that's using an ISO insurance policy form has the same language, terms, and conditions, which we're going to talk about today. So whether you're with Flip in regards to damage to rented premises, or you go to Farmers or any other insurance company out there, you're going to have the same language or similar language to it. Okay, so understanding that first, and then we can get into how it's covered. Okay, any questions so far about ISO? Okay, so this is a typical general liability. So you'll have your general aggregate limit. That means that's the most the policy is ever going to pay in a policy year. So that's $2 million. Then you have your products and completed operations aggregate limit. And that's a separate aggregate limit, another bucket of money for product liability or completed operations liability. Most of the people dealing in food is your product. And so if somebody gets sick from food, that is a product liability exposure. If somebody slips,
I don't mean to interrupt too much, but I just want to be really clear. Are you talking right now about the Flip program for food businesses, or are you talking right now for the kitchen?
This is both.
Both.
Okay. Yep. So let's take a kitchen because here's the reality. If a tenant is preparing food in your kitchen and somebody gets ill from that food, everybody's getting sued. Okay. And the tenant's going to get sued for the food, but if they can tie it back to where they got the kitchen, an attorney can loop in everybody that's involved. Now, I'm not saying you're at fault. That doesn't matter. Sometimes, that comes out later on when they do discovery and all that kind of stuff. But you can get named in a lawsuit by the mere fact of somebody on your premises preparing food. Okay, and so the product liability can also protect you as the food kitchen from a product liability claim. Okay. Personal advertising injury is coverage for libel, slander, wrongful entry. It's a coverage in there. I've seen a few claims over the last 35 years that have come on the personal advertising injury, but it's not common. Each occurrence limit is the most the insurance company will pay for any claim, any one claim. So the occurrence limit's the most they'll pay for a claim. The aggregate limit is the most they'll pay in 1 year. Okay, so you could have two $1 million claims before your aggregate limit is exhausted, and then your policy is no longer in force. Okay, that makes sense? So every time you have a claim, so if I had a $500,000 claim, it reduces your aggregate limit by a $500,000. So now you only have $1.5 million in aggregate limit. Okay, so that's kind of how that works. And this is across the board, whether you're with Flip or somebody else, whether you're a kitchen or you're a food prep, these liability limits act the same. Now, the elephant in the room, damage to rented premises. Okay, that is a $300,000 limit. Now, we're going to talk about the how the general liability responds, and then the exclusions, and then how damage to rented premises responds to claims. So we're going to get into that. Medical expense is what we call no fault. It's a coverage that keeps things out of court. If the claim's under $5,000, a bodily injury claim, they're probably just going to pay it, and they don't have to prove that you were at fault for that claim. If it goes over $5,000, then it goes right into the $1 million limit. Okay, so that's how that medical expense works. Any questions so far? Okay. All right. I need to implant this in everybody's brain. Liability coverage is for third-party damages. Okay, meaning I got to cause bodily injury or property damage.
Third. Chris, you said third, and this says first. So I just want to clarify which one.
Yeah. Okay. So the first part says liability covers third-party damage. Liability does not cover first-party damages. Okay. So first-party damages would be stuff I own. right? My own business personal property, my own building coverage. Liability doesn't cover that. It's only got to cover damages to somebody else. Okay. Even when we're talking to damage to rented premises, it's covering damages to somebody else, okay, that you have caused. Are we clear on that? Does that make sense?
Can you give us an example?
Sure. So if I have, I'm a shared kitchen and I have a tenant come in and they have some, another, because you're going to have an agreement with a tenant, right? But let's say they bring an employee in and they slip and fall, okay? That is a third party damage. There's damages to somebody else. But if I have a fire and I have my business personal property burnt, that's not going to be covered by liability. That's going to be covered by your own property coverage, okay? So anytime you think about even your auto liability or homeowner's liability, it's all the same. I've got to do damage to somebody else. When I hit somebody, I've caused damage to a third party. If somebody came to my home and slipped down the stairs, that's damages to a third party. So the same thing with commercial liability. You've got to have damages to a third party for that to trigger. Okay, is that helpful? All right. So this, and I'm going to get a little insurance technical, but I'm going to try and keep it at a really high level. So the insuring agreement is in the commercial, this is the ISO commercial general liability language. This is standardized language in liability policies. It basically says the insurance company is going to be willing to pay those sums that you become legally obligated to pay because of damages for bodily injury and property damage to which this insurance applies. And then it goes on and talks about they'll cover defense costs and all this, but if the insurance doesn't apply to a claim, they don't have to respond to it. Okay? So in liability, again, bodily injury and property damage to which you become legally obligated to pay to somebody else. That's the overall general insurance coverage. Okay? But now we're going to get into exclusions of what the property damages that they will not cover. Okay. So first, the general liability is saying we're not going to cover any property damage to property you own, rent, occupy, including the costs and expenses incurred by you or other people to replace or enhance it. Why? Is because there's commercial property insurance to cover that. And if commercial property insurance is going to cover it, the general liability is going to exclude it. Okay. The other parts that we're not going to cover under the liability is premises you sell, give away, or abandon if the property damages right out of those premises. Again, this is all property related coverage, not liability related coverage. We're not going to cover property loaned to you. And we're not going to cover property that's in your care, custody, and control. So if you lease like equipment, refrigeration equipment or whatever, that is in your care, custody, and control. If it gets damaged, that's not a liability issue. That's a commercial property issue. Okay. Clear on that? Now, so that's the exclusions. Now the insurance company is going to give some coverage back, and that's where we get into the damage to rented premises. It's saying, oh, don't do that to me. There we go. It's saying that, here, I'm just going to highlight this. The paragraphs 1, 3, and 4, which we went through. So we're saying this exclusion does not apply to property damage to premises, including its contents, rented for a period of 7 or fewer consecutive days. So if you're renting a premises for 7 or fewer days, you have what we call an open peril, meaning we will cover property damage to that premises. If somebody does vandalism or causes a fire or accidentally breaks a pipe and causes water damage, something like that, we're going to cover that under the damage to rented premises. After 7 days, we're going to only limit it to fire. Okay. So in that case, when we talk about the scope of coverage, the policy will never pay for more than the damage to rented premises limit, which is usually about $300,000. Sometimes we see it at $100,000. The policy is open peril for premises rented to you for 7 or fewer days. And for premises rented by you for 7 or more days, we're only going to cover for fire. And this does not cover any of your own property, whether it's a building or personal property or lease property. It doesn't cover that. That's what commercial property is for. Okay. So, examples. Let's say Pete's Pizza enters into a long-term agreement to access a shared kitchen space. During their food preparation, they damage a pipe that floods the premises. Would the commercial general liability respond for the damages? The answer is no. The reason why is because the premises was rented for more than 7 days. The only peril would be fire, and what caused the damage was water. Okay, so because of the long-term lease agreement, they wouldn't have coverage for that space. In the second example, if you have Pete's Pizza was attending a weekend food conference, during their stay, an employee damaged the sink, causing water to flood the premises, would the general liability respond? And in that case, it would be yes, because the premises was rented for 7 or fewer days. It's an open peril policy at that point, and the damage was water, which is not excluded. So when you're looking at damage to rented premises, so let's say that the shared kitchen is in a multi-use, industrial space or mall or whatever it is. You got multiple tenants there. And so if you got a building that's, let's say 50,000 square feet, you're occupying 5,000 square feet of this. And a tenant comes in and causes water damage and floods the space that you're in and floods the other 2 occupants that are also in the same building. The damage to rented premises won't respond to the damages to the space you're renting, because that would fall under, it wasn't caused by fire and you're in a long-term lease. But the damages to the other tenants could be covered under the property damage $1 million liability limit, because that's third-party property damage to a space you are not occupying or renting. That makes sense? Now, if a tenant came in or you came into that building and somebody caused a fire, then the space that you are renting would have up to $100,000 or $300,000 for the fire damage, and any other smoke damage that caused down to the other tenants would also be covered under the property damage $1 million limit. So there's some moving parts when you get in there. So if you take a scenario that you have a building owner that may be leasing the building to the shared kitchen, they're trying to push all the liability down to you, and then you should have a contract with any tenants and you're trying to push liability down to them, and then everybody's trying to push the liability away from them. The reality is the building owner has to have property insurance. That's his insurable interest. As you, as a shared kitchen, your insurable interest is all your equipment. So you should have insurance coverage for that. Now, in the tenant's agreement, you can try and pass liability downstream, but just because of the terms and conditions of the contract, if the tenant signs it, does not obligate an insurance company to pay all the terms and conditions of that contract. We could have a whole nother segment on that, what those terms and conditions can look like. But that's kind of an overall view of damage to rented premises. And it comes down to 7 or fewer days, you have an open peril policy. 7 or more days that your premise is rented, you are only perils for fire.
Okay.
So,
Chris, we have some questions that have.
I was going to say questions. Let's go. Let's get them.
Yeah, and they're all really relevant to what you were just talking about. They just kind of flow right into each other. So what people are kind of wondering right now is, well, how do I protect myself, right? And like you said, everybody wants to push their liability or wants to push the risk onto someone else. So Mark's asking, so what type of coverage do we need to require for our long-term renters if this insurance or if liability insurance doesn't cover equipment?
Okay, so one is, again, you should have your own business personal property covered, okay? And in the lease agreement, you could have indemnification clauses saying if you cause any damage, that they're going to be responsible for those damages. The challenge there is that gives you the opportunity to actually go after them, personally, because it's in the lease that they're going to indemnify you for the contract. But unless that damage was caused by fire because of the long-term lease, their liability is not going to pay for it. There's this gap. There's no real good way to fill this gap. Okay, whether it's the building owner, because let's say if you're leasing space from the building owner, you have the same issue as a shared kitchen to your building owner as the tenant has to you. Okay, and so the building owner is insuring his insurable interest. You need to insure your insurable interest. And if they cause damage to you, I would have some indemnification agreement in the contract where you said, okay, you signed this, you now have to indemnify me, even if your insurance company does not pay for it.
Okay. I'm going to move on to this next question from John. When they say that they'll pay amounts for third-party property damage, that the kitchen would need to pay, is that only if it has already been determined that the payment is required, or will the insurer get involved with a simple accusation or lawsuit?
Usually, so if there's a third party, if there's some damage to a third party, the insurance company, part of the claims process, if you file a claim, they will assign an adjuster. And if the adjuster feels like there needs to be legal representation, they will also assign an attorney to represent you in that case. The insurance company will pay, all the defense costs are included within the insurance company or the policy and the policy limits. And so, yes, they will assign representation, and yes, they will defend you on covered claims. I hope I answered that.
John, you look satisfied. You want to take your mic unmute, and if you have anything else to add?
Yeah, no, that's good. I just want to make sure that we could get the insurance company involved at the earliest possible time.
Yeah.
I see that somebody here wrote a comment. Well, that's not very helpful to us. Chris, I think what that was we're talking about, and I had the same thought, was this whole bit about having your tenants of the kitchen indemnify us, the owners. If they have no insurance, these guys are basically, often startups and are not very deep.
May not have a whole lot of,
I think whoever wrote that comment, Marion, well, that's not very helpful to us. Boy, I second that. It's not very helpful.
Yeah. So, and I can be empathetic with that. I understand where you're coming from. And again, it's the same, and this doesn't make it any better, but it's the same issue you have with your landlord. The landlord is in the same boat that you are with your tenant. And so the liability insurance is never designed to cover a lot of property damage that they have control over, because that's where property insurance comes in. You could have a lease agreement to where, I don't know, I've seen lease agreements say you have to insure property, and then they could take that to their insurance company and say, hey, can you get me property insurance on property I don't own? And that could be a route you could go. But I don't know, that will be dependent on the insurance company that's being approached, whether they're going to insure personal property of others, which is a way to get some insurance there. But I'm not going to say it's going to be the easiest for your tenant to get, but that's what the coverage would be, is personal property of others or personal property in their care, custody, and control. But they would have to buy a commercial property policy to do that. Okay. So when we talk about loss control, there's 4 things that anybody looking at certain exposures they have to do. They can avoid it, they can transfer it, and that's done through contracts and insurance, and they can accept it. There's certain things as a business owner, you're just like, there's operational risks. I forgot the 4th one, just totally slipped my mind, had a brain cramp there. So we're trying to figure out ways, we've got this exposure, and you're trying to figure out ways to plug these holes And you can do that contractually. You can do that with additional insurance requirements. Like I said, the personal property of others or property or care, custody, and control. And you can try and get that done for them. And I can do even a little research to see what carriers would be available for that. And then we can get back to Ashley and we can disseminate that information. But yeah, it is a reality. And that's why I wanted to point out in the initiation of this is not unique to Flip. This is unique to the entire industry. And so having at least the knowledge and education of that and say, okay, now what can we do? Then switching carriers isn't going to help you. That's, it's a matter of now what can we do to try and plug the holes when we have tenants come in, and we can try and solution that out for you also.
Okay, I'm gonna go to Sonia. So in that example in Pete's Pizza,
Yep.
she says, in this example, is Pete's Pizza needing to add another policy for the short-term rent in the borrowed kitchen, or does his existing policy on his main kitchen just need the new temporary location as an additional insured?
No, so because of the way the language is, it's already automatically kind of built in there, and adding additional insured is a whole different topic or animal. But if just by the mere fact that the policy language already says this, if you've got a short-term rental, like if a rental for 7 days or less, it's already automatically covered. And then it says what we're going to do if it's rented for 7 days or more. Additional insured status, unless a venue or somebody's asking you to add them as additional insured, I wouldn't add them, because then you're just exposing your limits to another entity. And I wouldn't do that just out of the kindness of your heart. I'd make them ask for it or contractually require you to have that.
Okay.
And I would have every one of you, I mean, again, this could be another topic, but in your contracts, you should require every tenant to list you as an additional insured and require insurance requirements. And there's some other language that we can suggest that you put in those in the contracts to help kind of give you a little bit of insulation from liability exposures.
Right. And if you're a client in a food corridor, that'll be automatically done. If your clients go through the new Flip portal, it'll automatically put the kitchen as an additional insured. So we'll take care of that part through the new feature, but we'll move on. Just plugging them.
Okay. That's awesome.
Okay, so Marion's asking for clarification on what we've kind of gone over a couple times. So just to confirm, any damage to rented kitchen property by a long-term tenant would need to be paid for by the kitchen owner's property insurance, correct?
Yep.
Correct.
Now, so just kind of give you, again, on claims, is that if somebody damages your property and you claim it on your insurance and they pay for it, your insurance company has the option to actually go back to the tenant and sue them, okay, to get and recoup their money. It's called subrogation. So the insurance company can pursue that, but they're going to make you whole. But when you're talking to your property insurance carriers, just bring it up in conversation. Just say, have a very open conversation and saying, hey, if my tenant damages the property, would I have coverage, minus my deductible? And then do you think the insurance company would go back after these? So again, part of this education is so that you can have conversations with whomever you're currently insured with, so that you can have this clarification on what's covered, what's not, or where you have to fill the gaps.
Right. What to expect.
Yeah.
One of these things happens. Because I'm sure oftentimes people are like, well, I just want the cheapest policy, so I'll get the smallest thing.
Yeah.
And then something happens, and you're like, oh, that wasn't covered. Well, you picked the policy that didn't have that coverage.
Yeah.
So, yeah. There's another question here from Mark. What about the renter's personal property that's stored in the kitchen? Their food is stored in our freezer and cooler and dry storage. If the freezer goes down, is their food insured by storing it here in our freezer, or is there a separate policy they need? If our freezer goes down by a storm, our insurance only pays for the repair of the freezer, but does not cover our renter's food.
Yeah. So I would, again, in part of the indemnification or your contracts, not indemnification, but part of your contract is require them to insure any of the goods they bring on your premises. Because again, if I go back to, let me just go back here real quick. One of the exclusions here is the personal property in your care, custody, and control. So your liability is already excluding any property on your premises that is not owned by you. And so you just got to let your tenants know they've got to insure it.
And is that covered through the flip program?
That's a that's a property coverage. And so they'd have to, so we can get property coverage, but it's something your tenants is going to ask for, like food spoilage. It has to be specific to food spoilage.
And but does a food business that has a flip that uses flip have that coverage?
No, they do not. We'd have to get an extra policy for them. Okay.
All right. And then Melinda Hambrick says, if the landlord has property insurance, the kitchen has personal property insurance, and the kitchen user has general liability insurance, with the kitchen named as an additional insured, are exposures covered?
Okay, so the additional insured, which is great. So you as the shared kitchen has your tenant naming you as additional insured. What that does is if the tenant causes harm to somebody else and they sue the tenant and they sue the commercial kitchen also, because the shared kitchen is being named due to the negligence of the tenant's policy will protect them. So I know that's a lot of circles. So let me try and simplify it. If I'm a tenant in a shared kitchen and I produce food and somebody gets sick because of that food, I get sued, the commercial kitchen gets sued, right? Because of my negligence, my additional insured status to you will protect you, okay? If I'm not negligent, the additional insured isn't going to give you any coverage. Okay, I'm just extending my policy to the shared kitchen is all. And I'm just saying, hey, shared kitchen, if I'm sued or if you're sued because of my negligence, I'll protect you. But if there is no, if the commercial kitchen is sued and I'm not negligent, then my policy is not going to respond at all.
Right. But Melinda, I think Melinda's kind of point is like, as far as coverage is concerned, are these layers of coverage kind of what you would say would be the best scenario?
Yes. Yeah, because usually the landlord's going to have in your agreement, if you're, so if your landlord, you got to keep the property and the liability separate. Okay. Right. I mean, two different silos. So if your landlord,
the big takeaway, right, is the property.
Yeah, the property.
And the liability coverage are two
so
separate.
the AI, the additional insured status will not give any protection for property. No.
Okay. And then follow on from that from Melinda is also, do both kitchen and kitchen users need liability insurance, or is that double coverage?
No, they both need them because you have two separate entities typically, and each entity can be sued. Yeah, and each entity can be sued separately, and so they all need their own policy. Okay.
So Lauren, I'll just read everyone's questions since you guys aren't raising your hands, so that's okay. This is working out fine.
Yeah. Okay.
Okay. So each client that uses Flip needs to specifically ask for their food to be covered in the event of a loss of power to cold storage.
Correct. Yep.
And that's regardless of if you use Flip or any other.
Yeah. Yeah. I'm gonna look. So there's two types of property policies, and I don't want to get too off the rails. Because you have business.
Food is considered property in this case?
Oh, absolutely. Business personal property. Absolutely. Okay. Yeah. And so we have an inland marine, which covers property wherever it's at. It's not specific to one location. And I'll look at that and see what the terminology is on there and get back to you on that. But typically you have to have a business, a commercial property policy with equipment breakdown and food spoilage to get that kind of coverage.
Right. And that's separate. Okay.
Yeah.
All right. So Sue, sorry. No worries. No worries, Sue. She keeps getting interrupted by deliveries, phone calls, etc. I like the shared kitchen manager. Exactly. Yes, we are recording it. We'll be sending the slides and the recording to you guys after, and any additional questions that don't get answered will also be in that email. So the answer is yes. You're welcome. Lauren says, thank you. Terminology would be great. We can also include some terminology from the slides in that. You're welcome, Sue. All right, John, another question. If a tenant is cooking and one of their employees slips and falls, and it is somehow determined that the kitchen was negligent, say they knew that there was some oil on the floor and they did not clean it up right away, is the kitchen protected?
Yes, that would fall under either your medical expense, or it would go into your $1 million limit under the bodily injury.
Bodily injury, right?
Yep.
Okay.
Thank you.
And then Marion has another question here. Chris, can you repeat what you said, or what they need to ask for in their policy as a kitchen owner? So there was some additional things that you had talked about.
Yeah, I think what I would like to do, yeah, because you want to be named as additional insured, I would also require what they call waiver of subrogation, and I would also
Say that again.
waiver of subrogation.
Okay.
And there's another endorsement called primary and non-contributory.
Okay.
And I can put this, I can send that to you, Ashley, so you can share it.
I think
and a little bit
of like a summary slide that's like, how to cover, like, best practice coverage, and then just give everybody that list.
Here's what I would, I mean, if I were writing, or if I see a lot of contracts and they vary in verbiage, but I think if I could give a quick high level, like what I would do is I'd be very specific about the limits you want them to carry, meaning don't just say you're required to carry general liability. That's okay, that's pretty broad. But what I do is you're required to carry general liability with a 1 million per occurrence, a 2 million aggregate, or even an excess liability if you want to have them that. We need to have additional insured status, waiver of subrogation, primary non-contributory wording in favor of the shared kitchen or whatever your business name is. And so be very specific in there. And so you have insurance requirements, and then you have indemnification and hold harmless requirements. And I am not an attorney. Okay. So I'm just, I'm going to put that out there. So you need to have an attorney write this up, because you need to make sure that it's going to be valid in your jurisdictions, to your current state laws, and have them, do their lawyer stuff to it. So if I send this out, don't just use it, because you need to make sure it's got.
Problem we have. Oftentimes people are like, can you send us a contract, like a draft contract that we can use in our kitchen? I'm like, no, we are not doing that, because I don't want to be liable for you using something that doesn't work for you in your jurisdiction. So
I'll give some bullet points, but you got to take it to an attorney, spend the money. I see it too many times where people don't do it and they get burned. It's just should be part of your whole business practice.
Yeah, the preventative versus the reactive. Great. All right. Does we don't have any more questions in the chat. If anyone wants to raise their hand or go ahead and unmute, if you have additional questions, we can open it up to the floor. We have about 15 more minutes with Chris for additional questions, or just chatter if you want to chatter.
Yeah, John.
I have a question. When people come in, they always ask about insurance, and I always say, look, I can't recommend anybody, but I can tell you who about half of our people use, which is Flip.
Right.
And I said one reason I can't recommend anyone, even including Flip, is because I have never seen a claim paid, which is a good thing. I've never seen a claim made or paid. But is there some assurance that you can give us that Flip is good with paying claims? I mean, is there any assurance? I don't know how to measure that.
I mean, we pay claims. It's just so. How do I answer this? An insurance policy is a contract. Okay. So when we're looking, and that's why I kind of wanted to go, I'm going to go back to the ISO thing. Right. And so there's so many variables that happen in claims. I can't go, every single claim is going to be covered, because there's too many. Well, who is legally liable, or do you live in a contributory negligence state? And there's so much that happens on claims. But the way the policies are designed to work is that if you cause bodily injury or property damage to somebody else because of your business operations or your products, that's where the policy should kick in and defend you and pay on behalf of you, become legally liable to pay. Yes, I can share claims examples if you want to see them. I'm not going to share who they happen to, that's not going to work. But yeah, we pay all kinds of claims on flip, and flip is a very to me, it's a comprehensive policy in the liability aspect. Now, if you go brick and mortar, it's a whole different discussion, right? I mean, that's when you get into all the property aspects of it, and the other operations that happen with brick and mortar that may not happen with just a vendor. So I can try and provide you information for assurances, but we have 8,000 clients using our food liability insurance program. Are every single claim paid? No, but that's with every insurance company. But I'm going to say that our policy is, I'm going to say, pretty broad.
Yeah. So Troy, it looks like you unmuted and you might want to chime in here. And we got this is spurred a few other additional questions specifically related to Flip now. So Mark says that he recommends Flip, and that Flip has a portal for his kitchen. He can log in and look at everyone's policy, and that he loves their customer service. So, and I think you guys being here today and actually helping explain and clarify and whatever is a testament to the type of company you are. So, and why we partner with you. So I agree with Mark on that. As far as questions are concerned, Amy's asking, can you please share what Flip offers as best practice policy for the shared kitchen customer coming into the shared kitchen and what it includes? So I don't know if that's a Troy question.
I mean, I can get back to this right here, because the basic policies, you're going to have $1 million per occurrence with a $2 million aggregate. So if somebody comes into Flip and buys that, this is what they're getting. We don't offer any other limits. Okay, so where other people might want a 100,000 limit or a $300,000 limit, we're just, nope, you're going to buy $1 million. Okay, and that's what you're going to have. You'll get the additional insured status. So the tenant is going to additionally insure or provide additional insured status to the shared kitchen. You also have options to buy the primary, or the tenant to buy the primary and non-contributory verbiage, along with a waiver subrogation verbiage, which we talked about. There is some property coverage they can get. It's not going to be broad to cover all the food spoilage and equipment breakdown and personal property of others that we've talked about. Actually, I'm going to take that back. I think it may cover some of the personal property, but it's a smaller limit, and I will provide Ashley with the verbiage and kind of what it will cover, and so you can tell your tenants that what limits they may need. So that's the high level view of Flip. And Troy, do they charge for additional insureds? I can't even remember on that program.
So as far as Flip is concerned, they are free and unlimited.
Okay.
Now, I will say this, that inland marine, which Chris referenced, that's referring to when you as the owner of the business are harmed somebody by your customers, versus general liability is the other way. It's when you harm them. But inland marine is an option, either while you're buying the policy or once you have it, and you can log in, just like what was referenced. You can log into your dashboard and you can add, as a policyholder, you can add inland marine as an option. Chris mentioned he's going to look closer at the inland marine policy as it relates to, I think you were talking about food spoilage.
Well, so just if I could jump in there real quick.
Yeah.
So the inland marine policy has verbiage in there that states something to the effect of, we will cover personal property of others while being used in the course of your business. So I need to look at the extent of that and what the other terms and conditions are, and then I'll get back to Ashley going, this is where it would cover, there's where it won't cover.
So you're saying the food business would get Flip and then add inland marine, and that
inland marine, and they may have enough coverage to actually respond to the shared kitchen equipment, and I'll verify that.
So the kitchen potentially could, in their terms and conditions, say, in order to be a client of our kitchen, you have to have this
exactly
insurance, and you have to have this inland marine additional
up to this coverage. Exactly.
Yeah.
Yep.
And understand that adding inland marine to your Flip policy is pretty affordable. It's all relevant, but it is an option, and it is something that is definitely an option. I think, and we have a little bit of time, but Chris, could you just I know you talked about two we call them endorsements in the industry, but two ways you can alter the policy. And you kind of talked a little bit about the waiver of subrogation and the primary non-contributory. Could you just, in a very short term, give them an example of how those two endorsements apply and why they would want that coverage on their policy? Or on their...
So I'll hit with waiver subrogation first, because we kind of gave the example of that, where the insurance company will make the policyholder whole. They'll, right? Because let's say that your insurance company comes in and pays on behalf of you and then wants to recoup the money from somebody else, and that's subrogation. When you request waiver of subrogation, you're telling the tenant saying, I want a waiver of subrogation so that if your insurance company wants to come back to me and sue me, they can't. Okay, you're saying that the tenant's policy or the tenant's insurance company cannot subrogate against you to recoup any money if they could. So that does that. The primary non-contributory is each policy has terminology that says, if there's another insurance policy in force, they're going to be primary, will be secondary. And so it's like, okay, who's going to pay first? So the primary portion is saying, okay, tenant, your policy is going to be primary. No matter what, your policy is going to pay first. Don't come looking to me. Okay. The non-contributory part is that it's not going to, you're saying, tenant, your policy is not only going to pay first, but you're not going to seek contribution from any other policy out there, which would be mine. Right. So when you put these policies on there, if you have, or these endorsements, the additional insured status was basically saying, okay, tenant, I'm being sued because of your negligence, protect me. And because I have waiver of subrogation, your insurance company can't come back and sue me. And your policy is going to pay first and not seek any contribution from me. Okay. So all these things isolate you from your tenant.
Yeah, they're protecting you. Yeah.
Yeah.
So we have about 5 more minutes and a few more questions. So we might do a little bit more of a rapid fire here if you can keep them.
Yep.
So Melinda says, in my case, the kitchen is doing business as a nonprofit. When I ask users to name us as an additional insured, do I tell them the nonprofit info or the kitchen info? It would be the business name.
Whatever entity is registered, just think about who's going to get sued, have them name that.
Right. Okay. And then how do we log into Flip for our kitchen, please?
Okay. When we send out these, you can contact Troy and he can help set up that and walk you through it.
And we'll put that in the email. Thank you. All right. And then most of our renters have food trailers. I see that you have trailer endorsement, and I was wondering, how is this different that the insurance that they have from their automobile insurance covering their food trailer?
That's a big question, but I can, there's a lot of moving parts. So usually the trailer, when it's attached to the vehicle extends the liability to the trailer. But once it's detached, there's no liability on that trailer. And so the trailer endorsement provides liability on the trailer while it's detached at, like, selling food. So if somebody trips on the trailer tongue or hits their head on a skirting or whatever, that would cover that.
See, that wasn't so hard. You answered that really fast and very clear too. I totally understood. All right. And then Troy sent to everyone that our support group can handhold you through the process as a policyholder, and our partnership team can handhold you through the commercial kitchen insurance as well. So yeah, we'll send more information to connect with Troy if you guys are interested in learning more. We'll also send all the resources. We will send the slides. We will send the video, and we will send you on your way.
Yeah, that's awesome.
Does anyone else have any questions before we wrap up here? We have a couple more minutes. Thank you so much. Yeah, I agree. Chris, Troy, I mean, I've enjoyed our partnership for so long. You guys are great. You're always willing to help and show up at our summits and really be there for this industry. And I really want to thank you guys for supporting all these local food businesses and the kitchen operators. I know Troy and I have worked quite a bit on how to write the best kitchen insurance policies possible, because it's an emerging industry. And so we have to kind of talk with owners and operators on what that risk looks like and why. It's a risky business, so there's a lot of layers. And so I hope this helped gain some clarity for folks around providers and coverage and best practices for protecting your business. So thank you all so much for coming.
And thank you for having us. I appreciate it.
Awesome. Thank you. All right. Everyone have a beautiful rest of your week and happy Monday.